Hi, IBD. I'm Meredith Heyman. This is IBD Explains. Thanks so much for joining me. The August jobs numbers are out, and the big headline hiring has stalled again. Only 22,000 jobs added to the labor market, and unemployment levels are at their highest since 2021. Good news for us. IBD News editor Ed Carson is here taking a break from being Ed on the Fed to talk these job numbers and break it all down for us. Ed, thanks so much for being here.
Thank you, Meredith.
All right. So, August jobs reports, how was it in terms of those hiring numbers and that unemployment rate?
Yeah, the hiring was weaker than expected. 22,000, as you said. It was about, like I think the expectations were 75,000, 78,000. That's pretty low there. June was revised down to a negative, so that was actually slightly down. First down month in quite a while. Last 4 months really aren't growing much at all over the last several months. Definitely not a good report. Jobless rate did tick up. There was actually some positive reasons for that. More people joined the labor force. That's been a concern. So that survey was better, but still it rose. And then average hourly earnings growth slowed a little bit, but it was really the non-farm payrolls number that was surprisingly weak.
And so now what's been the market's response?
Well, the market isn't quite sure what to make of it. On the one hand, this really bolsters Fed rate cut expectations. It was almost a lock. It's definitely a lock now for a September cut. There's even a tiny chance that September could be a 50-point cut. But more importantly, maybe that October, there's expectations of another quarter point cut and then maybe another one in December. And those were less certain. But on the flip side, the economy seems to be stalling out. The market wants to get candy and no downside from it. It wants the
Hmm.
Fed rate cuts, but it doesn't want to find out that the economy is really struggling because that, no, recession isn't going to be good for anybody.
Right, right, right. All right. So more to that. What does this month's jobs report, this August jobs report, signal about the overall health of the labor market and the economy?
Yeah, the labor market's not looking very good. And there's a lot of reports this week that bolster that. Job openings, jobless claims, the ADP report, they're all pointing to this. We're seeing weakness, especially in goods producing sectors, and that's like manufacturing, construction. Manufacturing's lost a lot of jobs over the last several months. Now, President Trump has imposed pretty hefty tariffs with the goal of long-term boosting manufacturing. Certainly in the short run, what's happening is that you're seeing some impact because there's big supply chains, Mexico, Canada, importing goods, and just around the world, a lot of intermediate goods, steel tariffs. So it's actually becoming pretty expensive to do those, raising prices on these goods, which reduces demand. So all of that, we're seeing an impact. Now, again, who knows what the long-term impact is? I mean, employers are still trying to figure out what's going on with what is the landscape going to be, because tariffs weren't really set until maybe until August or so, and that's still in flux. So it could change, but right now there's a lot of weakness in the sectors that are related to tariffs.
Hmm. All right. Since we have it on the Fed, I can't help but bring in for a Fed related question. How will this report, maybe, will it impact potential rate cuts for this month's Fed meeting?
Yeah, I mean it was pretty much a lock anyway. Probably we're still going to get a quarter point cut. I mean, it's still an outside chance, especially if other data like inflation and other things, come in cooler than expected. You could see a 50 basis point cut, but that seems unlikely. The real issue is that we're probably going to see more likely to see in October and December cuts, as opposed to just one or two cuts. Now it seems like three or maybe four cuts at the end of the year. So it just feels that stronger, just going to be more rate cuts. And so it's more about October and December than September.
So, Ed, July's jobs report caused quite a stir. President Trump fired the head of the Bureau of Labor Statistics, claiming she faked job numbers. Have we seen any evidence that this shakeup has changed the agency's approach to measuring the labor market?
I don't think so right now. I mean, I don't know anybody's really dug into things, and that would probably be hard. Uh, I saw a Trump official actually say, well, basically imply that August numbers were phony or false as a result, and that'll change. They haven't got a new head in there. It's unclear how this will go. I think that I think the general feeling economists is that the report is fairly accurate. I mean, it's one thing to say, oh, wow, they were way off. And there were big revisions last month, and there was revisions this time. But you have to think about it from the perspective not of, oh, it's not job growth 200,000, 100,000. They're not 50% off. You have to think about it from the fact it's like, oh, let's say there's 120 million people on payrolls. And if you say, oh, is 120.1, and then you later say, you know what, it's 120 million. That's really not that far off when you consider how few respond. A lot of it, they're basing it off of responses from firms. Some of them do it, and especially when there's economic change, as there is with the tariffs, whether that's positive or negative, errors tend to be higher. But so I don't think that those changes, and I don't know what changes they could make down the road. So we'll see if they will make changes and what those might be down the road. But I don't think there was anything in this report so far.
So, with this report, too, which sectors have been the most hit and which are remaining stable?
Yeah, we still saw, strength in well, manufacturing and constructions continue to be weak. Maybe we'll see construction turn up if housing picks up. There's some positive signs like maybe lower mortgage rates and so, but manufacturing has been struggling. So that's an issue. On the flip side, it's not necessarily a great sign, but healthcare and social assistance employment was the big driver, 46,800. And really, what that comes down to, we're getting older. Older populations needs more social assistance. Older population needs more healthcare. And so that's really been the driver. Under that, almost that given, we would have been down this month. I suspect we've probably been down over the last 4 months, excluding, you almost that amount. We also saw federal government jobs come down. It's really goods producing weak, and then this healthcare and social assistance strong. We also saw some gains in retailers and leisure and hospitality.
All right. And how can investors best navigate the jobs reports data coming for the rest of 2025?
I think as general, like it's not the news, it's the reaction to the news. And it probably helps after this report. It may be a little calmer because we sort of know things. We're sort of the Fed is going to be cutting rates. The jobs report, Fed meetings, some of these big economic news are sort of like almost an earnings report for the market. And so there's always that risk that you'll do things. So just be aware of these things. Don't try to guess. And even if you know how the number is, you don't necessarily know how the market will react. So you really have to follow off of that. So just be paying attention to that. Just like with big earnings, don't we often encourage people don't buy right or sell right at the open because you're going to see these big swings. And so just wait a little while. So when the jobs report comes out, if there's a big reaction, it's like, well, mate, don't get too, do too much for a few minutes or half an hour. And that's just in general because because there can be these big wild swings, following big news that people are trying to digest and figure out, well, what does it really mean?
Absolutely. All right, Ed. Well, we'll be watching. Thanks so much for joining me. This is IBD Explains. I'm Meredith Heyman. Stay right here on IBD for more. We'll see you next time.